What's up, guys? Russell here. I hope you are enjoying this channel, and if you're new, please subscribe because you'll get all the best stock alert services and option alert services reviews. I go through them all so you don't have to, and then give you a brief overview on my blogs and also in these videos. So today it's a bit of a change of pace. Normally I'm doing day trading alert services and things, but my friend Mark actually wrote this article for me on Disruption Investor. So it's a very different type of service. It's more of a like long-term stuff, but I'm a big fan of having a wealth pyramid where you build up longer-term dividendy type, investments. And then near the top of the pyramid, you start to do swing trading, and then at the very, very top, it's really short-term scalping and things as well. So I think that's the best way that I've found to make money consistently over the long term. Anyway, my friend Mark tested out Disruption Investor, and I just want to go through his article a little bit here. Past LAs. So here's fast facts. It's a guy, Stephen McBride, that runs this. He has a really good reputation at a place called Risk Hedge. So let's have a look at what Risk Hedge involves. Pull this up. So what they do is their sales pitches are always like this for all these services. Triple your money fast with the Amazon killer. It's like it's got to be to grab your attention, but for me, it often just puts me off. But it's like, what? No, I'm not going to, buy something because it says triple your money fast with the Amazon killer. But a lot of people do. It's why they do it. So it comes across quite spammy. So here are some of the disruptor stocks that they are claiming to have gotten early on. So Adobe, Priceline, and Cisco. These are home runs, like they say, but look at these percentages: 130,000% gains. Like, does anybody actually hold these things this long though? I know I don't. Like, that'd be ridiculous. I'd sell after it doubled, and that's if I'm lucky. So this is why I tend to avoid these types of trades. Like, I don't like tying up my capital too much. So I'm not a member of this, and I probably won't be, even though it's extremely cheap. So go back to the article. So they give a whole bunch of incentives, blah 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 blah. So all overhyped, go for 700% profits. So doesn't really sell me on all these extra bonuses. Like that's just a marketing technique. But what are the pros? Well, according to Mark, it's very clear and concise. So it's like exciting, groundbreaking, disruptive companies that have the potential to be like the next Amazon or the next Uber, like things that totally disrupt their everyday lives, which is really exciting. And that's part of the appeal, I guess, to buying these types of companies is you could be part of the future. And it's just a really cool concept. And it sells really well, this idea of disruptions. I know the Oxford Club has a couple of services focused on this stuff too. Here are the problems though. Like I said, it ties up all your capital, so it takes years sometimes to get to your profit zone. And with the disruption investor, according to Mark, they're currently holding 15 stocks, but they're not cheap. They're in the hundreds of dollars. So $16 per share is the cheapest, which is fine, but some of them are 300 bucks. So it doesn't matter too much if you're going for, double, triple things. It's just a lot of people think that, you know, it's because you can only buy like 5 shares of that as opposed to a penny stock where you can buy like 5,000 shares, that it really matters, but it doesn't, right? Because you make 50% on your investment of $5,000. It doesn't matter if you only have, 10 shares at 370 bucks each. So it's not a big deal unless you have a small account and then you can't afford to buy very many at all. Um, Apart from that, I wouldn't say that's too much of a con, to be honest. So yeah, so then it goes on to talk a little bit about the idea behind disruptive stuff. So you're talking about like cryptocurrency is the big talk at the moment. There's a whole bunch of stuff about crypto, and there's been some, other big companies recently as well. So here's a little bit more about Stephen McBride. I hadn't heard of him, and he is from Dublin, so I'm from Scotland, so not too far away, I guess. And apparently, he's been in charge of this billion-dollar financial institution in New Zealand. Haven't looked into that much at all, but that'd be something to do with your due diligence if you decide to check out this service. So yeah, so these disruptive companies, for example, Southwest Airlines, and this is why, disruptive flying when it pioneered discount air travel, Starbucks, high-end coffee. Yeah, Starbucks is a waste of money. And $7 for a coffee or something ridiculous. So here's INTU, disruptive personal finance. That's pretty cool. So not all of these are, Amazons and things. Some of them are a little bit more like this one, a little bit more under the radar. Um, Obviously, Starbucks isn't, but so I guess we are living in one of the most disruptive periods in history. So it's kind of cool that we get this opportunity to invest in these disruptive companies. Okay, so here's investment philosophy that Mark found is what they kind of do. So they look at five different financial clues. Here are some of the ones that they're looking at. Based on what we now know about how dominant companies are displaced, many of the today's top might not be on the list. As many as 7 or 8 of these stocks will perform poorly in the future, which means that disruption investors, most of the biggest and richest companies are typically bad investment. So he's basically just saying there that buying Amazon or Apple now is a waste of time. Not sure I agree, but in some ways you're not going to get, double digit percentage gains in the next year or two on those current disruptive stocks because it's too late in the game. So that makes sense. Nothing too new there. Let's see. So Mark won't divulge what's actually in the disruption investor's portfolio, probably for good reason. But he does say he's holding 15 stocks at the moment, so that's something to bear in mind is that you will probably have to spread out your capital between all these different stocks. So Mark did some due diligence where he looked at tip ranks. So if you never check that site out, it's really worth it. So you can check out tip ranks for doing due diligence on these types of stocks. So he also found that the analysts also say that the stocks that Disruption Investor is holding are also strong buys. So that's always a good sign when something confirms, some guy that you're following. So I thought that was pretty cool. So the best thing here though is he's back tested the stocks. So he's looking at the portfolio, when they were bought, what price. And he's found that out of the 15, only one has a negative return. All the rest are positive. Average return is 30% at the moment, and the one negative is only down 4 or 5%. So that's kind of like what I'm trying to show you in this review is like it's kind of cool to have people that are in the service looking at these things and then it can relate to you. So you can do some due diligence and then figure out if you want to buy it or not. The highest total return is 78%. Please note that these returns were calculated in late August, so I'm not sure how much that's changed. I don't have access to the service, like you said. Now, honestly, $99 for anything every year, if you pay $99 for an annual subscription, it's almost impossible, in my opinion, to lose money on that. I mean, how it's just that'd be extremely unlikely unless you're chasing some of the stocks or buying into these at the wrong time. I think $99 is an extremely fair price for these longer term investment ideas. I mean, it's ridiculous. $99 is often what you'll pay a month for a Discord or stock alert service. So $99 a year is like ridiculously good. So that's kind of cool. He says there's more education in there as well. So you get information about the market, investing, future growth sectors, and some education too. So this honestly sounds like a really good deal. Um, so this is unusual for Mark when he reviews these services. Usually he reviews them and decides not to continue a subscription. So the fact that he's actually buying a stock from the disruption investor is a really good sign. He's very careful with his money, so he won't invest in these services or newsletters or the stocks without a really good reason. So he must have done quite a bit of research on that. So it's kind of cool. This is also unusual. So if you look through my site, and I'll put a link to this review on the site in the description below, Mark never gives A plus for these newsletters. That's pretty unusual. So that alone is a good sign to perhaps look more into this. For me, I'm probably not going to just because I just don't want to tie up capital any more than I already have for that long. in the hopes that these things will become the next Amazon. But maybe you do. Maybe it's something that you guys want to look at and see if you want to invest in longer term stuff. So I will leave a link to the article in the description below so you can go and check this out. And I hope you've enjoyed this video. Definitely a little different from the normal ones that I've been doing, but that could be a good thing, right? All right, guys. Till next time. Cheers.